All right. Good morning, everybody. Welcome to Loan Officer Breakfast Club, Monday, November 17th, 2025. We're going to get this party started. Steve,
let's do it right now.
Man, your timing is not that great.
Monday, get that great.
You know?
Oh, man.
Man. You can tell you've been out of the church gig for a while, the playing thing for a minute, you know? Yep. It's
We're
like 2, 3, 4 now.
2, 3, 5, 7, 2.
Yeah, exactly. Good morning, everybody. Welcome to Loan Officer Breakfast Club, brought to you by the Mortgage Marketing Animals. It's a fantastic Monday here in the month of November. Boy, Thanksgiving next week, team.
Wow.
Mm-hmm.
So much to be thankful for, man.
Oh,
so
yeah.
much to be thankful for.
Always.
Yeah,
indeed.
I ordered, and I've been doing this for like the last 10 years. I ordered a fresh bird. I drive up to the Amish farm and I pick it up. It's not frozen. It's fresh.
Awesome.
Yeah. I try not to tell myself like what happened the day before with the bird, but yeah, that's what I do. So I ordered it.
That's interesting. Really?
So you don't have to catch it.
No, I don't have to like do anything.
Okay.
Yeah, no, it comes like, it looks like
just...
it's a frozen turkey. It looks like it's a turkey that you'd buy in the grocery store, right? It's packaged like that, but only it's never been frozen. It's fresh.
Wow. So this is the first time you're doing this?
No, I've been doing this for like 10 years. It's amazing.
No kidding.
It does make a huge difference. We had fresh turkey last year.
Yeah, it makes a huge difference. It's, you know what's interesting about it? So when you put it in the oven, it doesn't let out any juices. Like, so you almost have to put like stock in the bottom to baste it with like the first couple of hours. And then it is just, it is a big difference. If you've ever had like a fresh turkey versus a frozen one, it's significant.
I don't know where we could do that out here. I don't know, but that's, wow.
I live near Amish country. I just drive up there.
That's right. You are in the Amish country. Is it the kind of thing where they line up for you and you can point at the one you want, or?
Oh gosh, no, I don't think I could do that. No, called them. I called them and they're like, how big do you want? You know, give us a range. And I gave them a range. And Robert's saying Lancaster County. That's right. That's where I drive up to Lancaster County and I get the turkey. So.
I'd like to have that cute little one right there who's gobbling really loud.
See, no, I would take it home as a pet. Like that would be a pet. I would take it home and I'd be like, you're going to live a long life and you're not going to go anywhere.
Yeah, you'd point at one. I like that one. You go, oh, Alvin? Yeah, he's going to be a great one.
No.
You're going to love him. Yeah. Okay, well, got through all that. Jen, what's happening at Animals today? What are we doing today?
Remember, Megan Jen dialed in, has moved to Mondays at 2:00 today.
Yeah.
We're going to talk about scripting for the follow-up refer back.
Follow-up, refer back. Follow-up, refer back scripting. Megan Jen today.
Yeah.
So that's Mondays. It's. I'm really, just excited for you guys. You get moved to the Monday slot. You guys really must.
I think it's going to be good.
Great work, and just got moved up. You know what I mean? Yeah.
Upgrade.
Yeah. So awesome stuff. So that's at 2 p.m. Eastern.
Yes, please.
Okay. So for members, you just go to the website, go to classes, and you'll see it there. Connect there, 2 p.m. Eastern. Scripting, follow-up, refer back. Okay, then what else? Oh, Chris Johnstone, you wanted to say something this morning. What do you got?
Oh, yeah. I found something cool on Friday. Did y'all know that Google Docs can now read to you? So you can just go into Google. Yeah. So you can go into Google Docs and it'll actually read to you. Here, give me just a second. Frank, I'm sorry, I'm going to steal your sound.
I don't care.
I'll give it back.
It's fine.
I'll give it back. So inside Google Documents, you just go to any document that you want. So this is the AI blueprint that we give out every Friday. And so up here in Tools, you just click on Tools, and there's this new menu called Audio. And then you can just click on Listen to this tab. Check this out.
New AI book, The AI Blueprint for Loan Officers, Insurance, and Real Estate Agents.
Wow.
And you can like speed it up, slow it down. So it's like, if you've got a document that you want to go through in the background while you're like working or doing your exercise or whatever, Google Documents now reads to you thanks to the power of AI. So,
wow.
Yeah. And if you want the book, LOAI101.com. is how you get the book. So
LOAI101.com. Okay. Yeah. So we throw that in the chat for sure.
So, right, cool. But isn't that crazy?
It's nuts, man.
Yeah.
No, it's absolutely nuts. All right. Well, cool, man. Good stuff. Let's see. Before we move on to Justin Hubbert, who's our guest today. Good morning, Justin. Hope you're doing well. And, what he's going to talk about today is pretty interesting stuff because it kind of came up over the past week or so. And there was a little flurry about it. I got the word out a little bit to the LOBC database, if you will, and several people chimed in like, I need this, I need that, I need this, I need that. So I thought it'd be a good thing to talk about. But before we go there, we do have just a couple of minutes. I'm just curious how things went last week for everybody. Like, did we have any wins? I would just like to hear a win this morning. Somebody give me a win. Somebody tell me something great that happened like last week, over the weekend, something like that. Just want to
somebody
get the
unmute.
juices.
Let's
just want to get the juices flowing a little bit here. Yeah. So, and we will pick on you if you don't do it voluntarily. We're good with that. In fact, I find it kind of fun. You know what I mean? Just to rattle someone's cage first thing in the morning. You know what I mean?
First thing.
There you go.
There's Asa.
Asa.
What's up,
All
man?
right. What do you got, man? What's up?
Yeah. Oh, I follow up until I get a restraining order.
Yeah.
And this borrower that I've been following up with for a couple of years now, and turns out that she was hosting an event this weekend for other people in the medical field, and she invited me to come out and speak because I called her last Tuesday.
Wow.
She didn't have a letter to come speak, and here I show up. So I went out there and spoke. They probably had about 45, 50 people there. It was great. I got to shake hands, talk to a lot of folks, share a lot of information, and possibly generated a few on-site leads right then and there. So we're
Very
following
cool.
up with folks.
Yeah, things happen, Things happen when you shake the trees, baby, and that's what you did. And you got a good gig. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. Excellent, man. Well, hopefully something comes of that. What else we got? Anything in the chat, Kristen, before we move on?
Yes,
See
this
anything
is an
good here?
interesting one.
right.
Daniela says appraisal overturned 900K below the actual appraisal in Tampa.
Wait, whoa, what?
She got an appraisal overturn. It was 900K below the actual appraisal in Tampa.
Whoa.
900,000 below?
Daniela, you gotta tell us the details there.
Yeah,
Am I reading that
what
right?
does that mean?
This was a story of how appraisers, and that happened twice, and they're all in Tampa. Nothing wrong with Tampa appraisers, but oh gosh. So, Chris, I think you might like this one. It goes back to when you were talking about how, like AI may help appraisers. So I had to get the rebuttal. And you know what it's like to tell an appraiser he's done a really bad job, right?
Yeah, it's great.
So he values it in at 1.2. And I did this borrower follow up and call back, right? One of those. And I did this borrower's loan about 3 years ago, and it was valued at 1.5 at that time. It's actually valued at 2.1 million, and it's going to docs today at noon. And this is how I did it. I respectfully told the AMC and the appraiser that I am following all the guidelines, and went into ChatGPT and told them, how do I get a $2.1 million appraisal correct so the AMC can accept it? So I used ChatGPT to give all the comps, do it legally, sent it back, got 2 real estate agents on a Zoom call to actually coach them how to do this accurately so they could back me up. And it's now going to docs, like I said. And Chris, you helped bring that to mind by using ChatGPT legally in the guidelines of the appraisers to have the AMC overturn it and use our data.
Great
That
job.
is
Wow,
amazing.
that is amazing.
Congratulations. That's awesome.
That's a huge win, man.
That's a
Great
huge
stuff.
It was going nowhere.
And now it's going everywhere. Good
Thanks,
stuff.
Chris.
Love
Insane
it.
about that though, Frank, in deep research mode, which we learned about not last week, but the week before, like you can literally give it the market and it will go in and find all kinds of really interesting things about that particular real estate market and that particular neighborhood. Like it finds zoning information. It finds all kinds of things that you can use for these conversations with the appraisals. It's incredible how much depth it can give to the conversation. So Daniela, congratulations.
That's awesome.
Woo!
Next job is attorney. Not. Go ahead. Over to you, Greg.
Thanks, Daniela. Good stuff. Epic win. Glenn Simonamanyao. And then Greg. Another name I struggle with. Go ahead, Glenn. What do you got, buddy?
Hey, good morning. Just last week, I shared this on CallStars. Seventh call in to a realtor. We had coffee, and her husband is a lender, loans for a credit union. And I asked her, why'd you take my call if he does that? Well, she said there's a lot of loans that they can't do there.
Right.
So they're always looking for somebody else. But what struck me is she said, I love the way your approach. Your 7 calls in, she knew how many calls, and then also it was just about getting to know if we align. That's kind of the message that I'm sending out. Talk to here. She's on MoveTube now, and we have a follow-up set up to go over that, and then the other programs that we have available as far as follow-up, refer back, and it was funny. I just said that I don't want to make an awkward Thanksgiving, but because she was like, yeah, these aren't the things my husband does. And I was like, well, I was like, it's all right. We'll walk it through. I'm on his team, because, just let me help you out with what else you do. And then just so happens yesterday I met somebody else that does finance, but the auto finance for a credit union. And then I asked them, what do you do with your real estate turndowns? And so we have lunch set up for tomorrow just to chat about that. Cool dude. So thank you so much, guys. For
Great stuff, help. Glenn. You're reminding awesome. You're reminding all of us about that. That the credit unions can't do everything. They're very plain vanilla, that kind of a thing. And the truth is, the husband-wife duo there, the wife being the real estate agent, you're just helping them bring revenue into their family. Revenue that he wouldn't be able to do. So. Awesome. Great stuff. All right, Greg, what about you, buddy? And then we'll move over to Mr. Justin.
Greg Colgagagan.
Greg Colhallamahagan. Greg Callowhagen.
Two last names lined up. I was reminded why I do the theme day calls and that I need to be better at it because I locked 2 deals last Monday for $1.3 million. One was a past client just coming back to me because they remembered me, right? Just staying in touch with them once a quarter. And the other one was a referral from a past client. So a friend of a past client. So 2 deals, no realtors, all because of the theme days. So
it's a beautiful thing, man. It only works all the time, brother. Great stuff.
Every single time.
Yeah. The thing too is we are blessed in the mortgage industry because we do have the different, veins that we can tap to get some business. So great stuff, man. Excellent. Great stuff. Love the wins this morning, you guys. What a great Monday.
Yeah. I know we have to get to Justin, but there's one more I just have to call out. Sean said, I did something different last week. I traveled to Houston and Dallas to meet home builders directly. Basically those that I have funded a few ground up construction loans for, and I got the builder business, submitted 2 ground up loans totaling 1.5 million.
Holy shamoly. Congratulations. And that's a great segue over to Justin because don't forget, you can get those ground up construction deals done over at Park Place Finance, my friends, with Justin Hubbert.
Good morning.
Justin, glad you're here today. Wanted to chat about portfolio loans. When people hear that in the lending industry, sometimes they think, well, the bank has portfolio loans. It's loans that they aren't selling on the secondary market. It's loans that they're going to fund and service themselves. True. That is a portfolio loan. However, what we're talking about is portfolio loans today. DSCR portfolio, where you have an investor who maybe owns 7 or 8 properties and doesn't want to have 7 or 8 mortgages, would like to just have one. And so that's what we're going to talk about this morning, because you could do that, right, Justin?
That's right. Good morning, everybody. And congratulations to Daniela and Sean and everybody else on a fantastic, successful week last week. So, but yeah, we wanted to talk today about not only the portfolio loans and the opportunities that presents for major developers and perhaps these build-to-rent communities and maybe these borrowers that you have that have 10 plus rental properties that might be difficult to finance on your traditional Fannie Freddie loans, but also the DSCR product as a whole. So if you'll let me share my screen here.
You should have access.
There we go. Yeah. I grew up in Indiana, so I'm a little bit slower than most. So hopefully you guys can see this. So we are a private lender. We finance kind of 5 different products there: fix and flips, builder loans, cash out loans for builders, or really anybody that has an investment property, bridge purchases, as well as DSCR. What we're talking about today is kind of the DSCR and specific to multiple properties. So we have a portfolio project on DSCR that helps on a few different ways. One of the few ways is it cuts down on the number of transactional costs. So if you had, say, 10 properties as a whole, that doing financing those and getting 10 transactions done can be very expensive for those clients. We have a product where you can actually combine those, and it cuts down basically a few thousand sometimes, depending on the loan size per product. So these are our products. We're talking about number 5 today. These are the products that help people that are build-to-rent communities. So if you have those builders, I know Sean mentioned that, and having some success there, could be a product there that could help you there. There's a lot of BRRR buyers. What is that? It's kind of buy, renovate, rent, and then refinance and cash out, recollateralize, and then repeat. Real estate investors, everything we're talking about is investor related. So these are not primary residences. These are not second homes that they happen to rent partially on the side. These are full-time rental properties. It can be short-term, could be long-term rents. So it could be Airbnb as well. The one thing to note is the DSCR loan volume is skyrocketing. For those that have done this, and there has to be quite a few because they estimate by Private Lending Association, there's $84 billion originated in just DSCR loans in 2024. There's a tremendous opportunity there for growth and potential here. And with that is a lot of portfolio loans in that as well. This is a good example of a private lender's attorney that does doc prep. And what you can see here is just the increase substantially in 23 and 24 of the volume that they are originating on a quarterly basis of closing loan docs in DSCR loans. So just showing that there's a tremendous increase still today. So what is a DSCR loan? That's a debt service coverage ratio loan. The best way to put it is it just uses the rental income to qualify for the property. There's no tax returns or global income needed to qualify. So if you had 10 rental properties and maybe they're all losing $100 a month, that is not taken into account if we're only financing one property. It doesn't take into account what that DTI might be. We just look at the property itself that we're financing, whether that be one property, 3 properties, 10 properties, or so on. The rents can be short-term or long-term. You can also have some of these swing rentals where they do these 30-day rentals at a time. All of those kind of fall into this DSCR loan category. The other nice part is you can do a rental loan property as long as the cash flows at up to 85% of the purchase, 80% of rate term refinances, 75% cash outs. And then there's no real limit on the number of properties. So I know that Fannie Freddie has some limitations there. A lot of even the non-QM products have limitations on the number of properties that somebody can own. The DSCR product that we offer has none of that. So the calculation is very simple. It's just rents divided by your total debt service. So the ideal scenario is you want something in cash flow. So when you get a DSCR coverage above 1.0, that would mean that it cash flows, meaning you have more rents than you do total payment. But the calculation kind of shown here, just rents divided by the PITIA. If it's interest only, it would be calculated off of the interest only. So there is a way to kind of skirt that to get it if you're really close to getting above a 1.0, that might give you a little bit better rate, is to flip that to an interest only product. gives you a better DTI, or DSCR coverage ratio, I should say, on that. So the ideal scenario is 1.0. We go down to 0.75. I know there's a lot of products out there that go down below 1.0 out there. And so there's an opportunity there for those as well. But the majority of the loans that we see today are above that 1.0 because people are looking for that cash flow, specifically clients that maybe have multiple properties. They're buying these properties for the intention of cash flow. Another thing about this, there's a few different loan products within the product itself. There's a 10-year fixed interest only. I know that Fannie Mae for a while there, maybe 10, 12 years ago, had that. It seemed to be a hotter product than maybe what it is today. But you can do a fixed 10-year interest only, followed by a 20-year amortization. We have ARM products, 5-year ARMs, 3-year ARMs. Those rates are not that far off a 30-year fix, so we're not seeing a ton of those as you might in a different volatile environment. And then obviously the 30-year fixed as well. The rates have came way down, especially after these recent Fed announcements. The floor rates today on this is somewhere around 5.75, which I think compares very similarly to a investment property on Fannie Mae, but you don't have the tax returns and the qualifications on the global tax income that's needed, or tax returns that are needed to qualify. Although rates are, kind of floor rates 5.75, depending on LTV, credit score, DSCR ratios, most rates we've seen today are anywhere from mid sixes to mid sevens. You are allowed to make yield spread plus points. It's a little bit different than your borrower paid or lender paid. You can have both. It does not show on the HUD because it's a commercial property. And then the one difference that's there versus, say, a traditional loan is there are a lot of prepay options that can get you those better rates in the high fives, maybe low sixes. But there also are no prepayment options as well. The higher the prepay, the better the rates, because it kind of guarantees that they're going to be in that loan for a while. They typically close in an LLC. We lend nationwide. You don't have to be licensed in the state to be able to close that in most states. I use that as a caveat. There are some states that we do have to have a license for you in to be able to pay you. But you can have multiple partners on the LLC. You can have 5, 6 partners on there. And then we take the higher of the mid scores, not the lower of the mid scores. So there's a tremendous opportunity if you have somebody maybe that had a recent late and they can't qualify as themselves solely, you can add on a partner where they can actually qualify for that. And we take the higher of the two, but they can still both be on the loan. The property types are a little bit more expansive as well. We're going to get into this as far as the portfolios as well. But 1 to 4 family, we just talked about that. That's single family, triplex, duplex, fourplex. But we also have portfolios. So you have like 10 single family properties, or you have 10 duplexes, and maybe one of those properties is not rented, or it wouldn't cash flow by itself. You can put that into one loan and get that to qualify so that they globally in the totality qualify for a better rate, or maybe higher leverage, or just qualify in general. There's kind of a minimum of $75,000 per loan associated with each property in a portfolio. So we're not looking for properties that are maybe worth 30, 40,000. We're looking for properties that are 100,000 and above values, and then we can associate $75,000 per property. You'd be surprised, even in these properties that are in areas that you have $400,000, $500,000, $600,000 property values, how many portfolios we're doing there. We generally target 700 credit. It is our own cash, so we will make exceptions. We'll go down to 680 sometimes on some of these portfolios if the leverage is right. For the most part, we're talking about 700 plus credit scores. We also finance 5 to 10 unit small multifamily. This is a very hot product right now. It seems like the local banks have really kind of paused lending, especially on the long-term debt for some of these small multifamily projects. So if you have a small apartment complex that's 5, 7, 8 units, there's a 30-year fixed product out there for you that's in the mid sixes roughly, depending on leverages. There is a little bit of a hit to the leverages, so you're kind of 75%, and then we want to make sure that it actually cash flows after a property manager. So we kind of assume that's a 1.1 coverage ratio there. Loan amounts, we can make exceptions going higher, but for the most part, those are like 250,000 to 3.5 million. And then you may see properties like, say, Destin, Florida, or these areas which are big Airbnb markets, where you have 100% concentration of investors. Those are properties that fit very well into DSCR portfolios. And so we finance those all the time. So if you come across something that maybe allows nightly rentals, wouldn't traditionally be a Fannie Freddie product, there's an opportunity there to get a 30-year fix. It's very comparable on rates and sometimes even easier to qualify just in totality there. Non-mortables condos, if you have something that maybe there's a small issue with a legality or something, we can look at those as well. And then we also take projected Airbnb income. So if you have a property that's, say, in a rental market that is Airbnb heavy, but they're buying the property, so they don't have any history themselves, but the old owner does, we can take a look at that as well. We use a software some of you might be familiar with, AirDNA. We take that value and take it at 90%. That's our Airbnb income. That's what we use to calculate the rental income on those projections. So our program highlights specific to DSCR, again, the 85% of the purchase. You do need 740 plus credit score. We lend in most states. The NMLS, so if you have a license in, say, Nebraska, but you're not licensed in Florida, we can lend there because of our licensing. The 5 to 10 units we talked about, the Airbnbs is okay. We do allow vacant properties as well. And then you can do multiple property, 10 property portfolios. So maybe somebody has 80, 90 properties. We could split that into 7, 8, 9 different loans and get that to qualify individually as a individual loan on 10 properties. There's a lot of demand we've seen. I would say like 50, 60% of our demand for DSCR is on this portfolio product. And I think that's why Frank wanted us to go through this today. There's a 10 property max per loan. However, you can have multiple loans. So as long as you have that one property that, say, cash flows above the other 9, and globally it gets to a 1.0 DSCR, you can carry a couple of those loans or properties within that portfolio. So tremendous opportunity there for somebody that maybe has some properties that are underperforming to toss them into a pool of performing rental properties and get a preferred loan on those. The minimum loan size, again, 75,000. All do not need to be rented. So you might have a couple there that are not rented. We generally stay 500,000 to 5 million on the loan size on the rental loan portfolios, but we will go above that. We really don't want these like mega houses in there. So we're not looking for like multiple $5 million houses in there. It just skews numbers. We can do those individually, but we don't try to put those in there. So the main question here is, how can this help your business? And there's an easy way that this can help your business, repeat business, because most of the investors we work with are buying multiple properties per month or per quarter. And so while you might have a Fannie Mae borrower that loves you and is going to use you repeat in perpetuity, they may not buy that second home for 6, 7, 8 years. Whereas the investors that we work with, they might buy a property within that month or the next month. And so there's a tremendous opportunity there. Another opportunity we've seen is these builders that maybe have some inventory that's slow moving. You can move those into a rental community. And we've seen that here in Texas. I'm based in Austin, Texas. We've seen quite a few of those in the areas around Austin. Where somebody is renting a property and they can actually decide, instead of selling all these individual builds, they can go to build to rent communities. And then you can also help investors cash out. There's a tremendous amount of cash out so they can actually buy other properties right now. And then the agents that are using these are not as targeted as you might see with some of these others that focus on leasing. And so you can work with these agents that are focused on leasing to help get them going. One other part that's a benefit here, we do soft pulls only. So there's no soft hard pulls there. So you don't have to worry about trigger leads. We close in 5 to 7 business days. We have a live pricing engine. There's no lender points on ours. So you can make yield spread plus points, portfolio loans, and then relaxed timelines on seasoning. So they bought a property, say 3 months ago, they renovated it. They bought it for 100,000. Now it's worth 300,000. We can take the new value on that today. This is the the quick highlights of the pricing engine. Some people have probably seen pricing engines on this, but these are the high level. You notice there's no DTI in here in regards to the overall qualifications there. So there's our base rates today, so you can kind of see where things sit. You can get in the yield spread game somewhere in the mid sixes. But there's 5 yeses to get to qualify of whether a DSCR works. And if you kind of think about this from a question of I need 5 yeses to know that this works, it becomes very simple. So number 1, does it cash flow or is it very close to cash flow? 2, do they have the down payment plus the reserves? Most of the DSCR loans require 6 months reserves. We do have some special scenarios where you can do as little as 3 months reserves. Do they have credit of 660 plus and no major DQs? Is the property location in urban, suburban areas and conform to the neighborhood? We don't finance anything that's rural for the most part. We will finance things in, like, say, Airbnb locations, like Tennessee has some areas that are very friendly to Airbnbs. We will finance there, but for the most part, it's urban, suburban areas. And then, is this an investment only property, meaning they're not going to live in it? And so if there's any second homes, then that becomes a little bit challenging. There's no income docs required on the loans. Again, so you just look at the leases or the potential income, which could be Airbnb statements, VRBO statements, property management statements, could be a variety of different scenarios there. But if all those are yes, this is most likely a viable DSCR loan and an opportunity for you to grab more business. I'm going to skip ahead here. These are some other projects we finance here. We do fix and flips. You can see some of these are not in the best of shape. And so I only mention that so that if you come across those, we can finance those for you as well and get you paid. So I know we're running out of time here, so I'll open this up for questions and send it back to Frank. So.
Yeah, let's go ahead and just, guys, if you got a scenario, because there's a bunch of people asking scenario questions in here. And just so you know, Justin, I'm going to get the whole chat transcript sent over to your team so you guys can reach out to people, okay? Because there's a bunch in here we won't be able to address it all. But for everybody else, just go to workwithparkplace.com. If you got a scenario, drop it in there. Just put in a little bit of information. I'll get back to you right away. Workwithparkplace.com. Maybe Jenny could throw that link into the chat. Workwithparkplace.com. Quickest way to get an answer for you. But let's go through some quick questions. David Bolton, real fast, what you got? Because we're at the top of the hour.
Cash out refi, is the cash out used as reserves?
Can be, yes, sir. Yes, you can use cash out as reserves on a cash out property.
Okay.
Yes.
Okay. Do you lend in Wisconsin?
We do. Yep.
Okay.
In fact,
there were some other questions in there.
In the Dells, which are kind of Airbnb locations. So going to the rural areas, we can look at those because those are Airbnb locations. So, yep. Good question.
Okay. Great. Recourse or non-recourse?
So we do put a personal guarantee on them. They do not report to credit. So the good news is, if you're worried about this maybe affecting credit, it does not. But we do get a personal guarantee. If there's some fraud, we reserve the right to go after them.
You got it. Of course, closing an LLC.
Most of these close in an LLC. Certain states allow us to close in a personal name, but I'll tell you 95% of them do close in an LLC.
Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com. I saw Rudy, Baltimore, Maryland. I know Baltimore's a weird spot.
Yeah, it's a case by case. For those that are not familiar, there's a big fraud ring there. So we kind of have to look at that as totality. But yeah, we have not just completely said no, but it is a cautious area.
Dave, if you want to Justin's contact, the best thing to do is go to workwithparkplace.com. Dave, it'll get to Justin. It just makes sure that it gets into the system and other team members can help you as well. Workwithparkplace.com. Let's see. Anything else, Kristen,
right
before we
workwithparkplace.com, just it's right here, just quick info and put your scenario in there. We can get back to you here this morning. So.
Yep. And they
Yeah,
will.
that's
They
probably
do.
the best way to do it. There's a lot of very specific questions. So I would just Justin, one more time, exactly how they do that to send their question to you so you can take a look.
Yep. So this is actually the website here, just top right corner says quick info. Put that in there, put your scenario in there. It'll ask for your name, number, email. We'll reach out to you and then put any scenario or whatever details you want us to answer. We call you back here this morning. One of our team members will and answer that and hopefully get it going today. Get you closed next week for the holiday.
So Justin, what I'll do is I'll get you, everyone's typing in slides because we've kind of taught our peeps that, if they do that, they'll probably get the slides. So what we're going to do is I'll get you the chat transcript, right? And if your team would be so kind as to just get, email your slideshow to everyone who said slides. Can you guys do that today?
Yeah, I'll do that here in just a second. So, yep.
Okay, yeah, you can put it in the chat, but I mean, we're going to email you the list of people, which will have all their email addresses, and maybe you can't see they're all putting in slides. So if you guys could just put that into your system and then send them the slides. If you want
the slides, just put in the quick info tab there, slides, and we'll get that over to you. We'll just email you the slide deck. So.
Okay, we're still going to send you the list of everybody, Justin, so that you can just
Frank, you're enabling, Frank. You're enabling.
Yeah. Awesome.
All right. So good stuff, man. Well, Justin, thank you so much, man. Super appreciate you being here. And
appreciate you guys having me on, especially early morning. So.
Yeah, you bet. Well, that's the time we do it. It's only early mornings around here. Yeah. So, well, just so you guys know, my Zoom is all locked up. I can't do anything here. I've got things spinning and swirling, and everybody's frozen and all that kind of stuff. So, I think we can wrap it up and go ahead and get on out of here. So, Carl, how you doing, man? Anything before we leave?
Man, we got a exciting week here on Thursday. We're going to be going deeper dive into using the for sale by owner technique to get listings for our favorite agents. Come to find out, they really like that. And so we're going to do a step by step of exactly how we're doing it. How do you get the book? How do you put your picture and your favorite realtor on the cover? How do you promote it? The email you send out, the video script that you send out, the social media posts you send out. So the cats that are doing this are having great success with it. So we're going to go. We covered it last Thursday. We're going to go into a deeper dive, and we're going to do some script role playing on it too. So Chris, if you could come, since we're going to be doing some role playing, Chris, if you could show up in that nurse's outfit that you have, we'd really appreciate that.
Absolutely, 100%.
So that's what we're doing on Thursday. Is we're going to be doing some script role playing and walk you through a step by step, so you know exactly what to do. We're having a very high success rate and meeting with the real estate agents and starting to get referrals from them. So it's I would caution you. Save this technique for your top agents. Like I wouldn't like the kind of the also starrings. You might not want to offer this to because it's such a home run with the big hitters. I'd kind of reserve it for them because you can only do so many. And so I recommend that you do it to your top producing agents. Good stuff today, Justin.
Yeah, man. Great stuff. All right. Well, Cool. So we'll go ahead and wrap this one up. Be on the lookout, guys. We'll get those slides over to you. We'll make that happen for you. Just go to workwithparkplace.com. Workwithparkplace.com. That's the best way to engage, guys. That's what we would tell you to do. It'll happen the fastest.
I heard it was like, what was it? 39 days till Christmas or something like that.
Yeah, probably. We'll know on Wednesday. We do the official countdown on Wednesday.
Okay. I'm a little premature, so
yeah. Well, we
heard
that's an issue for you.
Don't do it. Don't do it.
I had a nickel.
Okay.
Yeah. I had a nickel.
Gotta be careful what you say here. So tomorrow, Kristen and I and crew and all you guys, we are going to kick around the holiday marketing ideas, right? So as we go into the holidays, it's a great opportunity to have clever marketing ideas and, you know what I mean, get the word out. So we're going to kick that around. Wednesday, Roberto Monaco is going to be back.
Oh, awesome.
So we'll have Roberto Monaco back. He's always fun. Thursday, of course, Owen Lee. Friday, Chris Johnstone. I think we're on 105. Is it 105 this Friday?
Yep.
105 as we or chug along down this path of learning AI. So
wait, what's 105?
So 105 is how to have AI have conversations so you never drop or miss a lead.
Why do you call it 105? What?
It's
We're
the fifth
5
in a
classes
series.
So we started with AI 101, and it was the AI.
Oh, okay, I get it.
We just kept counting.
I get it.
And so it's kind of just like this weird thing that just happened.
I get it. So I just my last episode of the podcast came out. It's number 598. We're two away from we're 2 away from 600. Dude, you ought to listen. So you ought to go check out the podcast that just dropped today. I interviewed this. So I'm working with this guy, and his executive assistant has just been spot on. She's been amazing. And I said, screw him. I want to interview you. And it was fascinating. So this lady writes his his personal electric bill, his mortgage payment, his car payment. She does everything. And all he does is either work, or when he's done with work, he goes and hits a bucket of balls, hang out with his wife and kids, and everything is taken care of in his life. I thought that was I've been doing that approach pretty successfully at work, but at home, I never even thought about having somebody else check my mail and do whatever needs to be done. Isn't that interesting?
It is interesting.
That's super. Where do I go to get the podcast, Carl?
You go to any iTunes or wherever you listen to your podcast, just Loan Officer Freedom. It was very, very, very fascinating. It was very interesting. So I never thought of all the different ways that you could use it. And it's just just free yourself up so that your mind, instead of worrying about or concerning about trivial things, you can spend it working on big things, like how do I get my next DSCR loan, things like that. So I thought it was very I thought it was very, very, very clever. I thought it was a very, if you're closing 1 or 2 loans, you probably don't need that person, but I would say around 8-ish. It really, I tell you, after listening to her, it really made a lot of sense. So anyway, thought it was interesting.
So that's already dropped? It's out?
Yeah, it dropped. Yeah, number 598.
Okay.
So dude, what are we gonna make 600, Frank? We gotta do something special. 600, man.
Yeah, man. Let's do it.
Yeah, that's a lot.
Yeah. Include me. I want to be on number 600.
Well, let's do it. Maybe we'll. Let me ponder that a little bit. All right. Yeah. Well, what we'll do too, guys, is on our daily email that we send out, I will put that podcast on that email. So it was. I thought it was just very fascinating, very interesting, and I never realized that you could have an assistant do everything.
Yeah, man.
Except by your wife.
Almost everything.
Almost every. Yeah. Except by your wife. Her Christmas gift. So you wouldn't want to do that, but.
I don't know. My daughter Katie's been helping me with that forever.
No, it's okay to have your daughter do it. I wouldn't I wouldn't have somebody over here,
True. I get you. Yeah.
My daughter, of course, but
we learn great things here at Breakfast Club. It never ends. All right.
I thought it was interesting. I did. I thought it was really, really fascinating on how he leveraged this person. I thought it was very interesting. So anyway.
All right, cool. Well, let's get on out of here. You guys have a great, great day. We'll be here tomorrow. Once again, Loan Officer Breakfast Club. Wednesday, Roberto. Thursday, Owen. Friday, Chris Johnstone. You guys have a great one. Adios!
Have a great day, everybody.
Here.